The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 6th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows each of us should always be a pioneer of our future versus a prisoner of our past. Everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. You can always send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 48 points at 20,697. S&P up 0.25%, up 5 points. The NDX 100 up just slightly, 3 points. The NASDAQ Composite up 10. Russell 2000 is the leader in the clubhouse, up 0.5%. That's nearly 7 points. The semis are totally flat. Gold is up, $5. It's trading out at $12.54. Silver's trading at $18.26. Light sweet crude up 56 pennies, a little over 1%. That's trading at $51.71. Leading the charge out here to the upside, you've got Constellation Brands up nearly $11. The Jazzy one, Jazz Pharmaceuticals up $13. Akari Therapeutics up $6. Sunoco up $4. L Brands up $4. Costco up $3. Children's Place up $3. To the downside, my screen seems to be a little bit on the fritz out here. Amazon is trading off $12, and we'll go take a look at Amazon for Larry, who looked at the daily chart and noticed that yesterday was a seventh wave move. So let's go take a look at that, where price could or should pull back to. Stamps.com down $2.50. MSC Industrial Direct is off 465. But I want to take a look at what you want to look at. Larry wanted to look at Amazon. So let's go look at Amazon. Let me pull this chart out here. We'll go take a look at two different charts in order to try to get a feel for where Amazon is headed to. So you can see coming off of this low back here, looks like on November 14th. If you start counting the waves to the upside, utilizing the tools of the Chapman wave, you will see that yesterday identified wave number 7. In this case here, singing in the key of G. Now that assumes that Amazon doesn't take out yesterday's high. Is that indeed a bear signal? Well, it is where you will see or can see markets change direction out here. Thus far right now, we have a change in direction. We can see that Stevie's red line out here is 888.23 as we speak right now. That probably gets tagged or pegged. You get underneath it, tells you prices are going to move lower. How much lower? Well, I'd come down to Stevie's red dashed line out here, the beginning of one of the Tom DeMark setup levels in the 819 area. So go ahead, jot those numbers down on a pad of paper, and let's go take a look at the Amazon chart utilizing my eSignal software and the tools out here. Primarily, we'll go take a look at some of our profiles daily or weekly. So we came up with the 888 as one of the levels to go take a look at. We've got, but there's nothing here at 888. We said, hey, how about the 820-ish level? At 820, well, it gets you all the way back down to the weekly point of control out here. So there's many places for this to find some support prior to getting all the way down there. The first of which is going to be 860.86. So you would say if you see a close, Larry, below 888, Stevie's red line, then we ought to see the top of the daily box get tested. Another $20 to the downside, 860. Volume-wise, on the pullback thus far is about 4.1 million shares. Yesterday made a high with 7.5. So you do have a slight increase in volume out here. I don't know that's a substantial increase. It's not exactly like what we would call volume off of the top, and that yesterday would be a blow off top along those lines because it's similar type volume. The day before we saw volume out here of about 5 million shares, so that's in essence what it's going against. It would suggest it's going to fail at 888, and 860 is probably your nut, and that is on the amazing one, Amazon.com. Now, let's go take a look at the markets. Let's go take a look at inside the and thanks for sending the email, Larry. Always good to hear from you, as well as all of you Denners and listeners and Tigers, Tigresses, you name it. Now, let's go take a look at one of the levels, a couple of things that we want to take a look at. Earlier inside the Tigers Den, we were taking a look at the NQ, so I'm going to look at something different out here. It just shows you the same kind of tools. We were looking at a 30-minute chart. Now, there's one thing I had posted inside of the Tigers Den, and that was this. I don't know that I posted. I just mentioned it, what exactly what went on yesterday. Don't worry, I'll get it out of my mouth out here. So here is the YM. We're going to take a look at the Dow Equity Futures Contract. And I know I had it set up the way that I did. Oh, well. If we take a look at coming all the way back here at 8 o'clock in the morning, that's where my crosshair is at. 8 o'clock in the morning on April the 4th out here. This is where price was somewhere right around the 20,512 level. And there was a beeline to the upside. There was a 316-point move between that swing point and the top that came in yesterday. Nice 316-point move. What you will see is last night at 10 o'clock. Between 10 and 10:30, we're looking at a 30-minute chart out here. The Dow Equity Futures Contract made a 100% move. You may say, what is that? That's where you come all the way back to a previous swing point. There's your swing point. So it was 316 points on the way up. Bulls thought they had it won. Then 316 points on the way down. Disregard the 293 out there. 316 points on the way down. Bears thought they had the game won. And now you're somewhere in between. Your 150-point move off of last night's low at 10 o'clock out here. So who's really the winner out here? That's all right. Nobody's the winner. This is just a two-way traders market out here. You know, you've basically made it halfway, so you've done about a 50% retracement. And the question is it going to do more of a retracement? Is it going to go ahead and make it all the way back up to that 316-point level, which is somewhere in the 20,820 level? Well, when we take a look at what also was occurring as that 100% move was unfolding, well, it was one of your favorite and my favorite reversal patterns. That's where price moves lower, does with less relative energy. Cavalry shows up. It's off to the races out here. Now, that you can see by the diagonal line. You might say, hey, I don't see a bullish reversal signal there. And that's because this system here only picks up the morning star with a 3-candle pattern, because that's actually the name of the candle. It is a 3-river morning star, named after your favorite general in mind, Oda Nobunaga. However, that pattern doesn't have to be 3 candles. It can be 4. It can be 5. In this case here, it was 4 candles, and it really did form a nice bullish reversal signal out there. Now, when you take a look at, and we'll have to come back from this break, when that price oscillator, the very bottom panel, gets to that zero line, it's typically a stalling point and an opportunity for Stevie's red line to get tested, which it did a half an hour ago. Now you have a test and rejection. It's onward and upward for the Dow Equity Futures Contract. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Got to love, if you're a golfer, you certainly have to love the play out at Augusta, the Masters tournament. So just before we went on the air, I had posted inside the den that Tomas Peters was 5 under par. He had just finished playing 10. Now, unfortunately, I can't say unfortunately, but it's on a screen to my left versus one of the screens that's in front of me out here. And I just turned during the break to because he just was getting, in essence, to amen corner. Of course, hole number 11, apparently he took a triple because he was 5 under, and he's now 2 under out there. That course will, bite you in the you-know-what. Now, with regard to bite you in the you-know-what out here, the sphincter muscle of the Bears ought to really be tightening now out here. And if they're listening into the show, well, we're going to show you why. Now, we'll take a look at the Dow Equity Futures contract here. This is a 30-minute chart, and I went ahead and really got rid of everything on the chart with the exception of Stevie's red line, combined with the 2 moving averages that form that, and the price oscillator at the bottom, because there's interesting behavior out here that simply will assist you in your trading, whatever time frame it is that you like to trade on. Because there's an interesting phenomena that occurs out here when you get to that zero line of that price oscillator down below, or when you get to that convergence, as you can see up top out there. What typically happens is price starts to stall. It's exactly what happened even during yesterday's move to the downside, right at about the 1900 hour. So right about 6:30 to 7 is when we saw that inside the Dow. Went ahead and moved sideways for a bit. But what I want to do is take you to where we're at in essence now. We come back into the 11 o'clock time frame, right as we got to that zero level. Once you get there, you see that price stalling, moving sideways. What it tells you is that Stevie's red line is going to be tested. Now, when I say tested, I'm not necessarily talking right to the tick, although sometimes it actually occurs that way. Sometimes it's slightly below. It's more important to take a look at, once that test occurs, what occurs afterwards, because it can act like a trampoline. Likewise, if it fails, then you would end up with a falling oscillator, price oscillator, below zero. That would be very bearish. Is that what the pattern looks like inside the 30-minute chart for the Dow Equity Futures contract as we speak right now? The answer is no, it doesn't. Because you had a test and rejection during the last 30 minutes out there. That says that 150-point move that we saw, that it's not done. It is not done. In fact, if we go try to figure out, well, where's the next level that the Dow could actually head to, I say we just do just the simple thing out here. Sometimes the simple thing is the right thing. And let's just take a look at a retracement of that 316-point move and say, well, the 0.618 level gets us up to 2707. You're at 2660 right now. 660, 40, it's 47 points or so as far as a move to the upside. Does it mean that it's going to stop there? No. It does not mean that it's going to stop there. So it all looks pretty good for a continued move north inside of the Dow Equity Futures contract. Now, what's interesting here as we take a look at this is this being that the Dow was the only of the equity futures contracts to make that 100% move. The NQ, the ES, as an example, got below its swing point from April 4th at 8 o'clock in the morning. But what it did was it came really all the way back into the April 3rd swing point before, and that was a real 100% move before it decided to continue then, move higher. And all the pullbacks that we've seen thus far today, this is one thing I regret not having done yesterday. Somebody should hit me upside the head with a 2x4 because things happen for you. So if you hit me upside the head with a 2x4, then I'll know. But yesterday, as price was moving higher during our show out here, was doing so with less volume, big time less volume. Let's just go take a look at, and now the pullbacks that we saw, by the way, inside the ES here just a few minutes ago back at 1240, that was 18,000 contracts. That was going against 78,000 contracts. Hello? That's right. Yeah, no way was there any kind of volume to push this thing to the downside. You combine that with the tests that we took a look at that you knew to anticipate. It just assists you with being able to just clearly identify what the charts are communicating to you and I. Now, 7,500 contracts 32,000 contracts at the swing point that it has just taken out, that being the ES, and it only did it with 20,000. So it's not exactly like it's got a lot of giddy up and go in here, but watch the volume exercise during this next 10-minute. These are 10-minute charts that we're looking at as we speak right now. Even the NQ, as it was pulling back right here, this is back at 1240 as well, 3,600 contracts. Last time it pulled back was 9,000 contracts, really going against 15, no way. Now watch the NQ at the 5430 level. That happens to be the 10-minute TAS market profile. If it's going to fail, that would be the failure area for the NQ. So hopefully that assists you with regard to what the markets are doing out here, and maybe assist you with regard to your trading. I sure hope that it does and will. Now let's go take a look at some other things that are moving and grooving in the marketplace. How about that light sweet crude? Let's go check out light sweet crude because it's up 62 pennies, 51.77. Now that's not the big deal. The big deal, Shamil, is that price is trading clearly above its TAS weekly profile of 51.16. Now, for those of you that do believe that the market, that being the S&P 500, moves in the same direction as light sweet crude, well, then probably you are looking for a failure today. That failure would have to be 51.16. Yeah, 51.16, because if you close below it, then okay, I'm on board with you. But closing above it says light sweet crude wants to trade higher out there. Now, if you don't believe in that correlation stuff out there, well, then okay, what this says is light sweet crude is going to make its way up into that $53 area. Yep, that's what that says. How about Goldilocks and silver? Gold trade out at 12.53. It's got some problems. It's trying to do the pole vault out here, and it cannot get above the level that was established quite a while ago, and that's at the price point of 12.60. Doesn't mean that it won't take it out, but it has not been able to get above 12.60. That happens to be the weekly TAS market profile, 12.60.40 to be exact, and until we see it close above that, Well, just welcome to the sideways world of consolidations. And for those of you that are trading the triples inside of the GDX, God bless you, because not because you were sneezing out there, but just simply you've got to get ready for the sideways type action. You clear it, meaning in this case here, the GDX 2361, then that's a different story. But right now, it's just the same old story out there. And look for resistance to be 2361 and support to be $22.56 out there. Let's take a look at the number one equity inside of the GDX just to get a feel for what it is doing, if things have changed in Barrick Gold land. And the answer is no, it has not. You got an inside day today out here, but the top really of resistance for it is right around the 1977-ish area, and support really being down at about 1869. This is not giving us any indication that this sideways chop is going to end any time soon. Of course, maybe the yen would give us a clue. So we'll look at that. We'll get back to the break. But first, when we get back, we're going to go out to Garo in California. We're going to take a look at Snap, Crackle, and Pop. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to California, speak with Garo. Garo, thanks for holding. Thanks for calling. How are you today?
I'm very good. How about you, Steve?
Very well. Thanks so much for asking. And it sounds like today you're looking at or you're trading SNAP, ticker symbol SNAP. Tell us what you're doing, what you're looking at. What time frame first are you looking at?
SNAP is something that I'm doing on the side. It's very good to short. At this time, I'm shorting it. Yesterday, I shorted at 15 minutes at $20.02. Today, I'm out. I kept it from yesterday because the 30-minute and 60 minutes was very bare. So I kept it. I got out of it not long ago today at $20.19. I'm just waiting to see. Yeah, if it hits $20.39, it will go up, I think, all the way up to its pivot point, which is $21.20. Which I'm going to buy it, another 2,000 shares, but it has to hit that point, $20.39. But one thing that I was concerned about, that on your monthly chart, there is a bottom dot, which is $19.72. If that candle hits that dot, I think it will go way below that $18.90. In time, of course, not in one or two candles, maybe in 6-7 days. It will go somewhere around $14, $15. What is your idea?
So you mentioned monthly chart. Did you really mean daily chart with regard
yes,
to?
Sir.
Yeah,
yes, sir.
Okay,
I'm sorry.
good.
Yeah, daily chart. On the daily chart, the bottom is $19.72. I don't know what is the value of yours. If that hits that dot and the candle goes below than that, then it will go way below its previous low, which was on when was that?
March 17th. March 17th.
17. Yes, 317. I think we'll go way below around $14, $15.
Sure. So it's from a daily perspective, and what's nice is that both my parabolic star and yours line up at exactly 1972. So it's nice that we've got some congruence here, because there's such limited data. And then trying to figure out where SNAP might go to on a daily basis. There's really no pattern, in essence, that I would draw in here. But what I would be watching, at least from a daily perspective, would be the volume. And I know you don't use volume necessarily, but there are 34 million shares down at that March 17th swing point. And even in yesterday's move lower, it was 26 million shares. Now, it was picking up steam from the day before, but still watching the top of the March 17th level is 1985. So you're going to get to 1972, which would then say to you, okay, this is going to go lower. Just watch the volume there. Maybe it does, and it closes inside or underneath 1972, or I apologize, underneath 1985. Then it says you go test the bottom of 1890. But on the 15-minute chart out here, and I'll just switch to that for a moment because you were using this, in essence, the 15 and the 30-minute chart to get in and out. And I'm glad to hear that you did exit that trade, only from the standpoint that on a 15-minute chart here, right now it's kind of inside this little box, this little range. This is our market profile. On a 15-minute time frame, Garo, that box is really equally distributed. So I can't really say whether or not this entire box will be explored. In other words, if the point of control, the little cyan color, was closer to the bottom, then I would say, hey, this says that this wants to go tag the 2114 type area, which isn't too far away from your pivot point is. So I think that with regard to, it looks like maybe you're using the 21 period simple moving average on this 15-minute chart, right around the same area. Mine right now is at 2037. And so the way that you take a look at this is once you would get above that, then that would become support. So this says to me, I am in total agreement with what it is that you're seeing. At this stage here, you don't have the confirmation. I would then also say, in looking at this 15-minute chart, if you were to see this at the end of today's or any point in time, close back below $20.20, then I think your other premise that this is going to go lower is in place out here. In fact, in the case of SNAP, And just looking at the 15-minute market profiles, not unless this thing were to close above 21.14, would you and I change our opinion on that. I'll put up the 30-minute chart here real quickly just to see what number that would give us with regard to our profiles. The number here, it's a much easier. It would be $20.47. Now, on a 30-minute basis, Carl, and I take a look at this market profile, that point of control, which is at price point of, where's the center, 2025, is more than slightly closer to the bottom of the box. So this says that this entire area should be explored, which is 2047. But I still have a blue dot that hasn't been taken out, which is a parabolic star of 2034. So in this case, if 2034 gets taken out, it's not that many pennies, but price should get up to that 2047 level. That's what I see when I combine some of your tools and techniques with some of the ones that I use as well out there.
I see.
Okay.
Yes. This will go higher today if it hits that 30 minutes upper dot. But if you check the 60-minute, the upper dot on that is 21.15. Yeah, that is. I think that is the max. It's going to go higher than that, and then it's going to roll lower. Or today, if it doesn't hit that 30-minute, the upper dot, you told me $20.20 that support. I don't see that there. I see the bottom dot is $20.03. It has to break there. If it comes to the support at S1, it may roll up again, that $20.20.
Absolutely. So 2020 is not a parabolic star dot. Instead, 2020 happens to be a horizontal market profile level, which I've learned to really get accustomed to utilizing these to assist us on where traders are, especially on the time frame that you're trading within, where price is likely to go. It's really a great tool when the box area has a structure that is either bullish or bearish, meaning the center is either closer to the top or substantially closer to the bottom. Then it really provides you with some really great information. Just an additional tool on top of the parabolic star and the 5, 21, 50, and 200 smooth moving averages.
Mr. Steve, one more question. Later on, if you have the time, FIZZ, Fizz, Frank, India, Zebra, when do you think that will roll down? Whenever, if you have the time, I will listen to you from TV. If you have the time, just look at that chart. And I'm long for a while, a long time. I want to see when do you think it will roll down? And I thank you very much for your time. I'm going to get off the line. Thank you, sir.
You got it. I thank you. And we're going to cover Fizz when we come back from this break. That was Garo in California. And now we're going to when we get back from this break here, National Beverage Corp. FIZZ. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're taking a look at the chart. National Beverage Corp, FIZZ, is the ticker symbol on it. And, Garo, I'm just going to take a look at really the lightning bolt pattern, the A to B equals CD. You've already got this thing nailed with regard to your parabolic SAR system out here and the moving averages that you use. Market profile-wise, there's nothing out here for us to hang our hat on. What we know, and this is taking a look at the weekly chart, I'm just using the what I'll call the smaller A to B equals CD pattern. That's using as my A point from a measurement the February 8th, 2016 low. That's at 32.35. Makes a nice run up into a July 25th high of 64.73. Makes about a 0.786 retracement. The exact number was 79.03%. Did it with volume. Nonetheless, that wasn't enough to go ahead and set a bottom for it. That's your C point. 1-to-1. Was 71.52 again on a weekly basis. Well, that was hit with a wide-ranging bar. That was on March 6th. Markets don't end on wide-ranging bars. It also happened to be volume of 2.6 million. That was taking out volume of 1.4. So that's a positive. Continues to move higher into the next level, the 1.272 expansion, 80.33. No bearish signal that is in place. Now it's on its way up to 91.53. The only caveat here is if the cavalry were to arrive, if there were some bears that were going to, if you were to see some type of bearish reversal signal. But that's not what is in the cards as we speak right now. Now, that's using the smaller A to B equals CD. There's another one. We can see where price takes us here as we go ahead and we draw that in. Of course, that's also red, so let me just go ahead and delete the smaller one. And this says that 96.06 would be the next level where Fizz would travel to. So not until on a daily basis out here, if I put the daily chart on my screen, there just simply isn't anything that's registering on my chart that says that this thing has made some kind of top. Not a thing. You know, your biggest danger inside an equity like this probably comes on an earnings release or some other piece of news, and that would be that the volume inside this is March 9, 2017. And that's where you saw a 1.1 million shares. If this thing ever were to fall out of bed, this is where it would fall to. It'd be a pretty decent haircut from $84, where it's trading right now, down to that volume level. It is this type of scenario that is the reason why I got into technical analysis. It is exactly this reason. Tom can attest to that because I showed up at that Master Trader Series knowing diddly, that means nothing in my language terms, about technical analysis. Fundamentals, a whole different story. And he said, hey, here are the 75 holdings that I have inside my portfolio. And a few of them, like Red Hat and others that were doing great, but then came out with earnings. The earnings were great, and then just simply hit the deck. Had a big, huge move to the downside. I wanted to understand inside my portfolio, was there a way to look at an equity that was doing well, such as Fizz, such as National Beverage Corp, and if something went wrong, what was my exposure? Where is it that this, so I could take a look at the risk reward. Then the risk on this is that price pulls back into your high volume area, a breakout area. Now that's just one of the areas. There is that high volume bar, the daily basis from September 28th. If things ever went really wrong with this equity, and I know you'd be long gone because you use stops and so forth, that's where it'd be headed to. But others are listening in and don't know what they might do or decide to do with regard to some type of transaction in here. And that's the real danger in a stock like this is that, we had volume as we passed the B point, as we broke out, but it's there's a little bit of volume on March 28th, 500,000 shares. It's really not that much, and it's not that far from where you're trading right now. So I'm not saying be careful because there's no other topping signal, but it is what it is. And boy, do I hate when people say that. So you must not appreciate the fact that I actually said that because why did I even say it? Okay, let's go take a look. I haven't checked the email out here. Probably should to see, let's just see here who has, if anyone, has sent in a request. I like to take care of those. Don't have, let's see here. Just give me uno momento, por favor. If I see anything that just pops up on my little screen here. I don't see it, but during the next break, I'll just make sure because I don't like to, if you take the time to write, I want to take the time to respond. Okay, so what do we want to look at? Really, we covered pretty quickly gold and silver, I think we did, and light sweet crude for sure. The markets, you've got my take on what the markets are. Now, let's go with regard to the markets, let's go take a look at the volatility index. Are the bulls out of the woods? The answer is no. The interesting thing here, and so I don't know when that shoe is going to drop. I don't even know if that shoe is going to drop. It still says that shoe may drop. Now, if you look at the very bottom portion of my screen, you're going to see a nice little rise. This is pretty amazing. Closing basis, because we're using a line chart out here. But you go back to January 27th. This is one of the longer rising bottoms patterns that I've seen in going back historically and taking a look at the volatility index. What does that mean? I don't know. I know that when you have that type of rising bottoms pattern, should it hold, it just signals, yes, we have seen a initial retracement, but it just says to me there's another one coming. I just don't know when. Odds are favoring that it's a doozy out here when you start to see a pattern like this. You might say, what's a doozy? And a doozy, until this pattern fails, is like 10 to 20%. Now, that's off of the highs already out here from March the 1st until that high gets taken out. But this has got to be caution. Don't throw caution into the wind. Until that gets taken out, which it hasn't yet, you just have to be cautious. Doesn't mean that the markets don't move higher out here, but you start to look for these signals, right? You start to look and you say, hey, is price moving higher? Is that real? Is in the game of the poke? What is it? Liar's poker out there? Is that what it is? Well, we'd go take a look at, is this real or not? Well, now we can switch over and take a look at the ES Mini, right? Our role, yours and mine, is to continue to use information that the market reveals to us, right? Such as the ES Mini. During this half-hour period that we're in right now, we can see that price is moving higher, doing it with less relative energy. Therefore, you see that first diagonal line on my screen. That alone is nothing more than, hey, you got some bad weather, that may be blowing in out here. And you'll know if it blows in when you see the hurricane. I'm not talking about Hurricane Carter. I'm talking about the hurricane or the bearish reversal signal. It's not there yet. Until it shows up, it just doesn't matter, other than to tell you, okay, now we have a signal with regard to the retracement that is going on that says you really should be careful. You might say, well, why do you say that? Well, hey, folks, if you take a look at the bottom that was formed last night, it was exactly the same pattern that was forming there. So why would it work any different? It doesn't. It won't. It could, but it probably won't. I can't give you 1,000% guarantee, only like a 99% guarantee. So we want to watch. Is there going to be a bearish reversal signal on this candle here right now? I don't know. Probably not. But we'll know in about 10 minutes, which means we really won't know until David White's show starts out there. But let's see if there's any other patterns. So the ES has got one of those patterns there, one that formed the bottom. The NQ, no, there's no way for it. It hasn't taken out its previous high. Let me go take a look at the Dowster, see if the Dowster is forming that pattern out here. No, it is not, but it's in wave number 6. So this is a two-way market, folks. It's an absolute two-way market. And that's the beauty of it for both bulls and bears. Steve Rhodes with TFNN. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we really pay attention. We really focus on these price relative strength divergent patterns. And the reason is because they work so well. But you have to know how to use them. The way that my signals form is totally different than anything you would see anywhere else. And that's because, Picasso was the one that said good artists copy and great artists steal. And so I wanted to be a great artist when it came to technical analysis and trading, understanding why markets do what they do. Heck, each of us, each day, try to learn even a little bit more. We haven't uncovered everything. But if you just take a look at it, we could go back further than 1946. But if you take a look at, this is the Dow, by the way. If you take a look at the 1946 bear market meaning that there was let's use the technical terminology for it, a 20% or more decline from peak to trough out here. And you can see the pattern that formed out here. All right, you can see price moving higher, new and less relative energy. You got in this case here, dark cloud cover that formed. You're taking a look at Stevie's red line and so forth. And so that was the 1946 top. Now, not every bear market forms with that pattern. Not every single one. Here's 1957. We're going to call it rounding to 19.4% drop. You'll see also bottoms that form out here. Tops for sure. Bottoms, sometimes you'll see this pattern, but at most of your major tops, we go back, my studies go back to 1886, I think it is, something like that. Here's 1961, 27% decrease. Let's just look using the Dow. Here's 1966. Out here, 1968. Now, 1968, we did not have a price relative strength divergent pattern. But if we use Stevie's red line and a little crossover that I've created, well, that called it 1973, 1976. You're kind of getting the gist out here, why these patterns. That was a 26%. How about 1981? There's a request out here. What did 1981 look like? Voila. Price moves higher. In this case here, you had a nice little key reversal session inside of the Dow. This is a weekly chart that we're taking a look at. You can see how the bottom formed with that morning star pattern out there. Price moves. So you pay attention to these signals. You don't have to, but I would suggest that you do pay attention to these signals. And for those people out there that somehow believe that there is safety in their bonds, and making sure that you have some type of but the typical portfolio analysis out here with regard to the wealth managers, it's still pretty much a 60-40. The aggressive ones, it's like a 53-27, and then they squirt in there some emerging market crap. The reality, not that the emerging markets are necessarily crap out here, but my whole point is that it is not safety. The markets, the S&P, can move in the exact same direction as the 30-year Treasury. We could put up other bonds out here. So don't get sucked into that. Know that you're not getting sucked into it, but don't get sucked into that. Sure, sometimes they do correlate, meaning they go in diverse directions. But the reality is, if you go back and really see why bonds are moving down and the market is moving up, it has more to do with interest rates. It doesn't have anything to do with regard to where the market is headed to out there. So that is my take, and I think I'm going to try to do a workshop on this so I could really share that with more folks. And there's more detail that is out there. Hey, if we switch over, we take a look at the Dow today, right now, just at least where are we at? This is a weekly chart for the Dow. You don't see any kind of price relative strength divergent pattern. So anything that does occur inside the market out here, folks, just very likely to be a little correction, 10%. 15, 20% at some point in time. It just ain't going to be today. Folks, stay tuned. Your favorite polar bear in mind, David White, will be up next. Tom O'Brien from 3 to 5. Andy Heck from 5 to 6. Have a great Thursday. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.